Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for joining us today.
Welcome back, Devin.
Thank you. Well, let's start with the Federal Reserve, where Chairman Powell says the Fed is going to look at tapering its asset purchases sooner. He says the American economy is very strong, but he also says it's probably time to stop calling inflation transitory. Tell us about his remarks.
During a Senate hearing on Tuesday, Mr. Powell said it would be appropriate for the Fed to consider accelerating the reduction of its asset purchasing stimulus program at this meeting on December 14th. His comments, which caused the stock market to tumble and bond yields to rise, were part of a broader shift in how the Fed characterized the risks to an economy that faces a fresh coronavirus threat following the identification of last week of the potential more transmissible Omicron variant in South Africa. His remarks suggested the Fed is pivoting from being more concerned about nurturing a faster labor market recovery toward being more anxious about keeping prices from rising higher. Mr. Powell's speech also indicates opening the door to raising interest rates in the first half of next year as it grapples with inflation and a potential new virus wave that could exacerbate supply chain disruptions.
A rate hike would certainly be a big change, and we'll get to the fallout of his remarks in just a minute. But in Europe, inflation in 19 countries that use the euro hit a record high of 4.9% last month. Energy costs were a big part of that. What's the inflation situation now in Europe, and what effects might that have?
Official figures of Eurostat show that the consumer price across the 19 countries that use the euro currency are rising at the record rate at 4.9% on year in November. It is the highest since record keeping began in 1997 and up from 4.1% in October, the previous high mark. As in other countries' high inflation record rate is a result of huge spike in energy costs. And the economic recovery from the coronavirus pandemic and blockages in supply chain also accelerate price increases. Under normal circumstances, the price increase would likely pile pressure on European Central Bank to raise the key interest rate from a record low 0%. However, the recently discovered Omicron variant has prompted some uncertainty over the global economic outlook. So it would be very difficult for European Central Bank to change any policies sooner or later.
Right, and back to Powell at the Fed with his remarks this week. We saw the main indices on Wall Street, stock indices down on Tuesday from around 1.5% to almost 2%. A lot of volatility right now. What's happening in the global markets?
On Tuesday, U.S. markets have retreated in a large scale due to concerns over the impact of new COVID-19 variant Omicron and rising inflation. Dow Jones Industrial fell 1.9%, and the Nasdaq Composite, laden with technology stock, is also fell 1.6%. Investors pulled away from riskier assets, which is stocks, and sought haven in government bonds. The stock market declines accelerated after Federal Reserve Chairman Jerome Powell said the central bank would consider speeding up the wind down of its easy money policies in an effort to curtail inflation. In response, investors sold shares deemed most apt to be affected by inflation, such as banks and rapidly growing companies like tech stocks, as well as those that have been hit by supply chain issues like manufacturers and miners.
And in contrast, today we saw a rebound in Korean stocks, which were perhaps oversold in the past week or so. The session before was the lowest level on the Kospi in a year. Tell us about the domestic market.
Domestic market moved to the opposite direction of the U.S. market today. There were 6 straight trading day losses until yesterday in Seoul. So that made investors to believe that it is almost the bottom of the market. So investors bought the stock very aggressive today. Kospi gained by 2.1%, and Costa also gained by 1.2% in a single day. Almost all the top 20 large cap stocks gained today, but Kakao Bank, Preston, and SK Bioscience retraded in a rising market. But it should be noted that the investors are still worried about interest rate hike by Bank of Korea and ongoing inflation and disrupted global production chain. So domestic market will experience more volatility until the end of the year.
And finally, Professor, a big story today, Korea's exports reaching a new monthly high, surpassing $60 billion last month. The country also posted a trade surplus again, as it's done every month going back to the early months of the pandemic. Both export volume and prices were up for a second straight month. Tell us which sectors are driving this strength and what stands out to you.
Korean export is growing without stop from September of last year, and it became the strongest momentum to recover Korean economy. According to Ministry of Trade, South Korea's exports spiked 32.1% on year to reach an all-time monthly high in November on the back of strong global demand for chips and petrochemical products, which are number 1 and 2 export items. Outbound shipments came to $60 billion compared with $46 billion from a year earlier. It marked the highest monthly figure since the country began compiling the data in 1956. And it is the first time that the monthly tally surpassed the $60 billion mark. Imports also advanced 43.6% on year to $57 billion last month, resulting in a trade surplus of $3.1 billion. It marked the 19th consecutive month that country's export exceeded imports.
Right. Well, Professor, we'll have to leave it there for today. Thank you, as always, for coming on and sharing your insights with us. We appreciate it.
Thank you very much.